Hi there, I'm Doireann Mc Dermott and you're watching The Week Ahead, where we look at some key events which may shake the markets this week. I have Philip Shaw on the line and he is the Chief Economist at Investec in London. Hi Philip, so let's begin by looking at Asia. We have the Bank of Japan rate decision this week. How are markets performing ahead of this decision and what are you expecting to see from this meeting?
We're not really expecting very much at all from the BOJ this time around. Certainly the indicators that we've seen over the past month or so have been broadly positive in terms of recovery potential for the Japanese economy. And data out over the weekend show that Japanese bank lending growth hit a 4-year high. So we think that the BOJ holds its fire this time around, and that broadly seems to be the opinion of international markets as well.
Also looking at China. Now we have some Chinese data out this week, including some inflation figures. Do you think this data will have an impact on the markets this week?
Well, one important piece of data that is probably coming out this week relates to lending to the economy. And typically markets have looked at the new yuan loans figures, which are released with the money supply data. But more recently, it's been more widely appreciated that the shadow banking sector has a much greater role in the economy. And the total social financing figure, therefore, for June, should be the more watched figure. And that's important because of the liquidity squeeze which the People's Bank of China exerted on money markets a couple of weeks ago as a warning to that it wasn't prepared to see any a further escalation or further blowing up of the bubble, particularly from the shadow banking system. So the total social financing number is probably something that markets will watch very closely with regard to China.
Moving over to the US, what type of week do you think it will be for the US as we have the release of the FOMC meeting minutes, and of course, what are you expecting to see in terms of market reactions?
Absolutely. Fed tapering has been the subject in global financial markets, not just since the FOMC meeting, but broadly over the past couple of months. What we actually saw last week was that bond yields rose again because of tapering fears and stronger data, but actually equity markets managed a small rally as well. So it could well be that in terms of risk assets, that markets are now virtually got their head around the fact that we're likely to see a tapering in September's meeting, as I guess a preliminary step to the exit strategy over the medium term. So the FOMC minutes will still see some reaction from markets and be closely watched. Another point is that Fed Chairman Ben Bernanke speaks later on that evening at the National Bureau of Economic Research. So that might actually give us a slightly more up-to-date view of what the Fed is thinking compared with the minutes.
And finally, looking at Europe, there was some interesting news last week and over the weekend surrounding Greece and Portugal. Now, Philip, can you tell me your thoughts on Eurozone news and what you're expecting to see from the European markets this week?
Well, the two big pressure points last week were Portugal and Greece. And over the weekend, the Portuguese coalition agreed on an inter-party agreement, which seems to have taken political risk out of the picture there, with a stated intention that they will get the economy ready to exit the bailout program as mandated next year. Greece, certainly for now, the news has been positive, with the Troika having reached a staff-level agreement with the Greek government this morning. That's likely to be accepted by the finance ministers at the Eurogroup meeting later on today. Whether that solves all of Greece's problems, we very much doubt. We think there are a lot of unresolved issues remaining. But for now, the sentiment is likely to be more positive, especially in the wake of the European Central Bank's decision yesterday to give rate guidance and to say that rates will remain low or be lower for an extended period of time. So those are really the main issues, but of course over the course of the week everyone will be looking to see whether the euro area economies are on track for a stabilisation and perhaps a recovery at some point later on this year.
Thank you very much, Philip. Well, viewers, the TV team will be keeping you up to date with all the latest economic and forex news this week, so make sure you stay tuned.